Doesn't seem to matter where you look today. The markets around the world are falling. And that, of course, follows President Trump's tariff announcement yesterday. Liberation Day is what he called it. Here are the major U.S. indices so far today. That was not a very pretty picture. Understandably, I would say there's a lot of investors who are feeling kind of rattled out there and actually even fearful in many cases. Now, as a retired investment advisor, portfolio manager, I have definitely seen plenty of days similar to this. I want to offer a little bit of perspective today. Before I do, though, I want to say that having spent most of my adult life as a portfolio manager doesn't mean that I know everything there is to know. One of the first and most important things that you learn, hopefully, if you work in the industry, is that you never know it all. You never have that crystal ball. You do see a lot of different things, though, and your experience that you go through can sort of pay off, and it can help you put things in perspective. And I do agree this is a pretty dramatic drop that we're seeing today. Certainly, it's not unprecedented, and it is part of being an investor. Now, in the video, I want to talk about two important angles. First of all, I want to look at the danger of having an improperly designed portfolio. This might contribute to why a lot of people are feeling more pain than others. Secondly, I want to offer a calm and a realistic view on the opportunities that pullbacks like this can create if you're prepared and if you are disciplined. I guess I'm hoping to sort of bring a balanced perspective. I'm not here to say, don't worry, everything's going to be fine, although it probably will be. I'm also not here to just say buy the dip, without any context. I just want to sort of offer some thoughts and help you sort of take a step back, take a breath, and look at the bigger picture. I want to start with something that's very important. Not everyone is experiencing this market drop the same way. Just today alone, there's a lot of investors who are down a little bit. Some might be down 1 or 2 or 3%. You may be one of those investors that's down 5%, or probably in many cases, even 10%. There will be others who are eking out a little bit of a profit, even with the markets today. When we look at what the difference between those scenarios are, more often than not, it comes down to diversification. And I know I've spoken a lot about that on this channel before, but that's what it comes down to today. Now, if your portfolio is heavily concentrated in one sector, and I'm just going to say tech stocks, for example, because that's been very common these days, or even a few individual names, you're probably going to be taking a pretty big hit right now. Now, so far today, energy down over 7%, tech is down 6%, consumer discretionary is off 5.7%. And the same logic goes for anyone who is overweight in one country or one region, like emerging markets. Can be especially volatile when we're seeing uncertainty spiking like we are today. The real kicker here is that during time of market panics like we're seeing today, the correlations rise. So this means that even your safe stocks or sectors might be falling alongside everything else. When we see these times of stress or panic, like during a sharp market drop or a global crisis, investors tend to sell first and ask questions later. That's just the way we operate as humans. We call this risk-off behavior, and that leads to a temporary increase in correlations across all the asset classes. So that means that the assets that usually move differently start falling together. But this is where a well-diversified portfolio, which is spread across asset classes, sectors, geographies, will usually soften the blow when you're seeing a big drop like that. Now, when you're going through this today, it might not feel like it. There's a lot of headlines out there. There's a lot of negative sentiment. But in the long term, diversification, I think, is your best line of defense against moments like this, so you don't have to panic. Now, importantly here, you can't predict these events. No one can, but you can prepare for them. And that's the point of this segment of my video here. Now, let's also talk about the emotional side of things. And these are the moments when investors start to panic. We're seeing that, we're hearing that right now. Look at this heat map from this morning's market action. How optimistic does this make you feel? And when people see red numbers like this, they hear the noise and they think maybe I should just get out. Maybe this investing thing isn't for me. That's a human natural reaction, but it is also one of the costliest mistakes that an investor can make. And I think back, for example, to 2008. A lot of you watching this video will remember that. It's not that long ago. Or when you think of the COVID crash in 2020, a lot of people were investing then. Or even if you go further back, pick a time, pick Black Monday back in 1987, or any other time that the markets have crashed. Each and every time the markets have plunged like that, every time they have eventually recovered. In fact, long-term investors were rewarded for staying the course. But a lot of people sold during these panics and then they never fully got back in, so they missed the rebound, they locked in their losses, and because of that, their financial futures are worse off. The truth is that the market does reward patience and discipline. It does not reward emotion. And we're seeing these scary drops today. But if you react out of fear, if you sell everything, if you abandon your plan, that's often more damaging than just the drop itself. Now, I want to zoom out just for a moment here. I want to talk about this pullback that feels like it's sort of sudden, it's fast, and the headlines are pretty intense. Some of the headlines we're seeing this morning, I'll pick a few here. Hefty tariffs send stock markets falling. Stocks dip sharply. We're seeing a stock market rout. And then that stock rout deepens and the NASDAQ is plunging. Markets do move in cycles. Hopefully you're aware of that by now. We look at corrections. That's defined as a 10% drop. That happens quite regularly. One correction every 20 months on average. We then see bigger drops, 20% or more. They're less frequent, but they do still happen roughly every 6 or 7 years. And every time that this happens, they feel to many like the sky is falling. But the markets have recovered from every single one of them. Of course, that's just the way it has worked. But for long-term investors, as we know, the markets have always moved higher. And we think of this volatility that we're seeing today. It's not a glitch. That's sort of a feature of being an investor. A lot of people say that's the price of admission of being involved in that game. So with all that said, I do want to shift to a more sort of positive or hopeful perspective as well. Because while there are risks and fears that we're feeling right now, there are also opportunities. And I say this if you approach them wisely. They're not automatic, but if you approach these times wisely, you can benefit. Here are 3 things that I would like to encourage every investor to keep in mind right now. Number 1, keep perspective. So as I mentioned, volatility, this is sort of the price of admission. This is about your mindset. The volatility is uncomfortable, but remember, it's not unusual. Markets do not move in straight lines. Think about it. If they did, there would be no reward for investing. We think of these dips as the very reason that investors do earn that risk premium over time. So you're being compensated for stomaching that uncertainty. So when you see your account down for the day or the week, remember this is just normal. If your goals are 5, 10, 20 years out, this is just a blip. Take a breath, remind yourself of why you're investing in the first place. And this certainly isn't the time to abandon your plan. It's time to trust your plan. That's assuming that you actually have a plan. Hopefully you do. I know many people don't, but hopefully you're not one of them. Now, the second thing, you can look for opportunities in times like this, but it's really important that you stay disciplined. Market pullbacks do create opportunities. When prices fall, quality companies can go on sale. And if you have cash on the sidelines, or if you've been waiting for a better entry point, it might be your chance to add to your portfolio. But, and this is really important here, you cannot go rushing in blindly. Just the fact that there's this opportunity doesn't mean that you throw all caution to the wind. It means being selective. It means sticking to your process. Now, lastly, remember this. You cannot control the markets. Everything going out there today is beyond your control. You can't control the politics. You can't control the tariffs, the global events that we're seeing. But you can control your asset allocation. You can control your own behavior. You can control your own financial plan. So these are things that actually matter to your long-term success. And now is a really good time to revisit those goals, rethink or check your risk tolerance and make sure that your plan still fits. Don't make decisions based on the emotions you're feeling today, but this is a good reminder. It's time to go through and reassess from time to time where we are as an investors. Also want to mention, don't react to the headlines. You need to react to your personal situation. If you work with an advisor, hopefully you would have heard from your advisor by now. If you haven't, that's probably not a good thing, but you can reach out to them, review your strategy, review your investment policy statement. If you have one, it'd be nice if you did, but just most importantly, stay grounded. Now, a special word here for retirees or people who are near retirement. If you are retired or if you're close to it today, drops like we're feeling today, these are sort of especially concerning for many people because you're drawing income from your investments. When markets fall, you might need to sell to meet those income needs, and that can do a lot of long-term damage. That's where I want to sort of talk about what's known as sequence of return risk. And this is exactly why a lot of retirement plans include a cash reserve. A lot of people talk, you should never have any cash on the side. But if you're in a situation where you're drawing from those investments, having enough to cover 1 or even up to 2 or 3 years of investment needs is not the worst decision. And it's times like this that remind you of that. If you are in a situation like that, take a step back, take a breath. The cushion is sort of designed for moments like this. If you don't have that set up now, no question, it's a good time to sort of talk to yourself or to your advisor, however you're managing your portfolio, to adjust your strategy of making sure that the short-term volatility doesn't affect your lifestyle any more than it needs to. If you manage your own portfolio, take the time to learn about this concept right now. Don't panic, but just make sure that you have a good plan in place. So I want to tie this all together here. No doubt, today's drop is dramatic. It's not the first. It's not the last time we're going to see it. The market will go through seasons, and we're sort of going through that rainy season right now. Might even be a stormy season, but all storms do pass. If you react emotionally, if you abandon your plan, or if you chase losses, that's probably not the right move that you should be making right now. I would say staying diversified, staying disciplined, staying invested. In most cases, that's what wins in the long run. And if you're feeling nervous about it today, don't beat yourself up. That's pretty fine. Talk through the nervousness, the anxiety with someone that you trust. Before you make any big moves, whether it's buying or putting more money into the markets, just take a pause, sleep on it, make sure that you are making the right decision. Investing success doesn't come from making the perfect trade. It comes from doing the right thing consistently over time, especially when it's hard like this, because this is when you can easily fall off your path. So just stay safe out there, enjoy the ride, stay grounded, stay focused on the big picture. Thank you for watching. We'll see you in the next video.